Bitcoin is gearing up for another big move, and according to derivatives metrics, we might be looking at a return to the $90,000 level sooner than expected. But is this just another bounce, or are we truly back in bullish territory? Let's break it down. Despite Bitcoin struggling to maintain momentum above $85,000 recently, on-chain data suggests the selling pressure might not last much longer. The Bitcoin basis rate, which measures the premium of futures contracts over the spot market, has rebounded from bearish levels. While it's not as high as it was 2 weeks ago, it's still in neutral territory. That's a sign that leveraged traders aren't panicking just yet. One major factor influencing Bitcoin's movement has been its correlation with the stock market. Lately, Bitcoin has been following the S&P 500 more closely than usual. That means economic concerns, like fears of a recession, are making investors rethink their risk exposure. If stocks keep struggling, Bitcoin could stay under pressure. But here's where things get interesting. Central banks may intervene to prevent a full-blown recession, which could push Bitcoin back up, as investors seek scarce assets to hedge against uncertainty. When it comes to derivatives, there's no sign of extreme bearish sentiment. Options traders aren't aggressively hedging against a major drop, and margin traders are still showing confidence. Right now, the Bitcoin long-to-short ratio at OKX stands at 18-1, which is far from a panic zone. Historically, when traders were overly confident, this ratio jumped above 40. So, while the current number suggests bullish sentiment, we're not in dangerously overbought territory yet. However, there is a wild card in this equation: Bitcoin ETFs. Lately, spot Bitcoin ETFs have seen net outflows, meaning more investors are cashing out than buying in. If this trend continues, it could slow down Bitcoin's recovery. On the flip side, if we see renewed demand from institutions, it could accelerate Bitcoin's move back above $90,000. So what's next? If the stock market stabilizes and central banks step in with supportive measures, Bitcoin could reclaim $90,000 in the coming weeks. But if risk-off sentiment persists, we might see prolonged consolidation before the next leg up. One thing's for sure: derivatives data suggests that Bitcoin traders aren't ready to throw in the towel just yet. What do you think? Will Bitcoin make a comeback soon, or are we in for an extended cool down? Share your thoughts in the comments.